Hi, David here, CEO and founder of the Freedom Founders Mastermind community. Well, as the saying goes, the chickens have come home to roost. What am I talking about? I'm talking about the high cost of capital, the increase in interest rates we've seen over the last 15 months, which in the last 40 years, we've seen a declining long-term secular wave of decreasing interest rates. These decreasing interest rates, going back again to 1980, back during the Reagan era, were the tailwinds of the tremendous amount of growth in financial products, Wall Street, in technology, and in real estate. Just to name a few, really all asset classes have benefited greatly by the low cost of capital, decreasing interest rates. Come 2020, COVID, actually on the back of the 2008 Great Financial Recession, which caused a lot of stimulus money to go into play by the Federal Reserve and by Congress. Well, quadruple that in 2020 with COVID, and the trillions of dollars that have been injected into the economy, printed money, fiat currency, had to go somewhere. And it went into financial products, Wall Street, it went into real estate, it went into private equity, which could gobbling up all kinds of consolidations in businesses and companies, right into the area that I'm most interested in or affiliated in, and that's dentistry. We've seen it in other areas too, but dentistry is where I look at. So my cause of action here is that a lot of people say, well, we're not going to have a recession. Everything's going back to normal. In fact, people are saying, well, interest rates will come down. The Federal Reserve will come to the rescue again, and they will decrease interest rates, and things will get back normal again. We just got to get this little gap here. Don't worry about it. It's all okay. And I'm saying, not going to happen. These long wave secular trends in interest rates don't just change overnight. There's going to be volatility, but the overall trend is higher for longer. Let's just say higher for longer, which means the recession that was predicted a year or so ago, which has now been pushed back by most economic pundits, including Chairman Powell, saying, well, I don't think we're going to see any hard landing. It's going to be a soft landing. It's going to be all okay. I'm saying they're kidding themselves. They're wishing, they're trying to create human behavior. They're trying to backstop the huge issues that they've created by all the monetary stimulation. The increase in inflation we saw at a high of 9.1% last year, which I don't even believe those numbers are correct. I think it's much higher, but that's just what the government stipulates. 9.1. Oh, now it's coming back down again after we've raised the interest rates like over 500%. Yeah, 500% we've raised those interest rates. Well, you'd think something would happen. The problem is the lag effect of these higher interest rates don't just show up on day one. In fact, I say there's going to be 6, 12, another 18 months where the lag effect of these higher interest rates will start showing up in many aspects. It'll show up in the financial arena. Your equities on Wall Street, stocks, bonds, mutual funds, ETFs. You're going to see a correction there. Technology, even though it's been riding high this year, it's going to see a reversion to the mean. Real estate, commercial real estate particularly, but even in housing, you're going to see a correction there that has been long-term coming. Again, higher interest rates. The cost of capital maintains that the status quo will not continue to exist. In the business sector, particularly, again, I'm talking about healthcare, and now I'm going to niche down into veterinary medicine, into dentistry, into other aspects where private equity, the roll-ups have been occurring and supposedly been paying out these high multiples like we've never seen before in the industry. It's been a heyday. Young docs have been taking chips off the table and becoming, millionaires essentially overnight. But the structures of these deals, even the ones that have been done the last year, are not going to play out the way people promised that they would or said they would. Why? Again, it's the cost of capital. If you're in the middle of doing any kind of a investment in real estate, syndications, the ones that you've seen over and over again, people say, well, we've made these high RRs, return on capital of 16, 18, 22%. That's been our run rate for the last 3 years. Jump in. We've got another great deal coming. You better dissipate that FOMO, because right now, unless you really know the operator and you really know what to look for in terms of the deals they're putting together, they're just running on air right now. They're running on air, and these things are most of them will fall apart. Even people who have great intentions and maybe had a good track record, they don't know what they don't know about a full cycle. They've never ridden on the backside of this. Same thing's going to happen in the dental industry with all the DSO roll-ups that have been happening in these big multiples that have been parlayed out to many really, I'd just say naive docs who have grabbed that apple, taken that bite, and understanding they're not going to get that second bite. Or that second bite, if it ever comes, it's going to be diluted and pushed way down the road. Again, why? Because of the cost of capital. The ability to get these roll-ups and these recaps is based on low cost of capital, like we had, over the last 15 years. Well, that's changed, and it's not going to go back down again. That's the thing that people think, well, I just have to hang on for a little bit. It'll go back down, then we'll just be back to business as usual. If that's what you believe, then just understand you're going to risky territory right now. Right now is a time to hold back and gain some understanding about the financial industry. Again, whether you're investing in real estate or you're investing in your future or taking chips off the table in your business, it's a dangerous time to rely on what we've seen in the past, a very dangerous time. I implore you to get some good advice somewhere, because if you're just rolling with what everybody else says, you're going along with the group think, the herd mentality, it's the last place you want to be. But it's so hard to turn away, isn't it? It's hard to turn away. Just trust me. I've been through these cycles. I've seen it before, and this one will be no different. There's going to be a lot of people that are going to get hurt, and I'm giving you the warning. But I've been giving these warnings for the last 6, 8, 12, 15 months and saying it's coming, it's coming, it's coming, and I believe we're right here on the precipice. Check on me in the next couple quarters. Check on me next year and see if I wasn't right about what is about to come down the pike.